You see it everywhere, right? Gold is absolutely surging. With all the economic uncertainty out there, it feels like the one safe place everyone is running to. But what if most people are making a huge critical mistake? What if the gold they're so proud of buying isn't really what they think it is? Honestly, getting this wrong could be the difference between real security and total disaster. So let me just put it out there. Here's the uncomfortable truth. A huge majority of people who think they're protected by gold, well, they don't actually own any. Not really. What they own is a promise, a digital entry on a screen, an IOU. And we all know what happens to promises in a real crisis, don't we? They can be broken.
Okay, so if it's not gold, what is it that they actually have? Well, they own a paper contract. It's a claim on gold that someone else, somewhere else, is supposedly holding for them. It sounds like a small detail, but believe me, it's a massive distinction. They're not holding the asset, they're holding a liability from someone else.
To really get why this matters so much, we first have to take a step back and look at why gold is having such a moment in the first place. This isn't just some random speculative frenzy, there's some really fundamental forces at work here. This number right here tells an incredible story. Ever since the US cut the dollar's link to gold way back in 1971, the dollar has lost over 85% of its purchasing power. Just let that sink in. What cost you a single dollar back then costs more than $7 today. Gold isn't just going up. Our money is systematically being devalued.
And in an environment like that, gold absolutely thrives. It really comes down to three big things. First, currency debasement. That's just a fancy way of saying governments are printing more and more money, making every dollar you have worth a little bit less. Second, you've got financial uncertainty, when the markets get crazy and the future looks chaotic. And third, and this one's huge, is a loss of trust. When people stop believing that the big institutions can protect them, they start looking for something real, something tangible.
And that right there brings us to the absolute core of this whole explainer. The one distinction that separates the illusion from the reality. You see, there is a world of difference between having exposure to the price of gold and having actual physical ownership of it. Okay, let's just lay it out side by side. Over here on the left, you have physical gold. That's your asset. It's in your possession or held directly for you. There is nobody standing between you and your wealth. But over here on the right, you have a paper claim. Think an ETF or a futures contract. This is not your asset. It's somebody else's liability to you. It's a promise, wrapped in layers and layers of counterparty risk. Just look at this pyramid of risk. When you buy a gold ETF, that's you up at the top. But look at all the layers you're depending on beneath you. Your money goes through your brokerage, to the ETF itself, which then uses a custodian bank, which might even use a sub-custodian, to finally, maybe, hold some gold in a vault. Every single one of those steps is another party, another link in the chain that can snap in a crisis.
And when those links break, well, that's when these hidden risks suddenly become very, very real. See, in calm markets, nobody thinks about this stuff, but when panic hits, trading can be halted. Funds can suddenly put limits on how much you can cash out. And if any of those counterparties in that long chain fails, your claim on that gold could vanish. You're completely exposed to someone else's problems.
Now you might be thinking, okay, this all sounds a little theoretical, but it's not. Not at all. History has given us some incredibly powerful and frankly painful examples of why this distinction is so unbelievably critical. We have seen this movie before. I mean, think about it. In 1933, the US government just straight up confiscated private gold. Then fast forward to 2008, as banks were failing. Sure, you could see the paper price of gold on your screen, but you couldn't actually buy physical coins or bars for anywhere near that price. The premiums went through the roof. And then it happened again in 2020. The spot price became a total fantasy, completely disconnected from the reality of what it actually costs to get real metal in your hand.
All of this history leads us to one powerful conclusion. The paper price, the price you see on the news, that's just exposure. And it can be, and has been, manipulated or just completely disconnected from reality. But physical ownership, that's real. You either have the metal or you don't. It's that simple.
So what's the right way to approach this whole thing? I mean, if paper gold is so full of holes, how should a smart investor even think about it? Well, it all comes down to understanding gold's true purpose in a portfolio, and that purpose is building resilience.
This right here requires a huge mental shift. Gold is not a get-rich-quick scheme. It is not your portfolio's primary growth engine. Think of it as portfolio insurance. You don't buy fire insurance for your house hoping it burns down, right? Of course not. But if it does, you are incredibly glad you have it. That's physical gold.
This thinking leads to 3 very simple, very powerful rules. Rule number 1. If you can't hold it in your hand, or it's not in a segregated, allocated vault in your name, you don't truly own it, period. Rule 2. Avoid leverage. Using debt to buy your safety net completely defeats the purpose. And Rule 3. Understand why you own it. Is it a panicked reaction, or is it a deliberate long-term strategy for preservation?
And that strategy is all about this word, resilience. What does it really mean? It's the ability for your portfolio to take a massive punch during a crisis and not get knocked out. It's about minimizing the damage so you can recover and stay in the game. Physical gold is a tool for resilience.
So this is the fundamental question you have to ask yourself. Is your entire strategy just about chasing the highest possible returns, no matter the risk? Or have you built in a component that is designed purely for resilience, purely for survival? Look, both are important, but in times like these, resilience is what lets you keep the wealth you've already worked so hard to build.
Let's end on this one final, crucial thought. Your exposure to the price of gold through some paper product, it's temporary. It depends on markets staying open, on brokers staying solvent, on promises being kept. But ownership, true physical ownership, that's permanent. It's a timeless asset that has survived every single empire, every failed currency, and every crisis in human history. So make sure you know which one you actually have.